I'm a big believer that open banking, if done properly in this part of the world, will be arguably the biggest catalyst for unlocking the growth in fintech. These payment companies might actually become bigger valuation plays than the core banks. We move away from generic banking and we start moving towards personalized banking.
Welcome back to another episode of the Change Officer podcast that is brought to you by our dear friends at podster.com. Creating a podcast seems like an easy thing to do, and it is, but to create a successful podcast that will engage the audience and drive traffic to your business, that's a little bit harder. But don't worry, media and marketing professionals from Podster can help you to create a podcast that will stand out. Do you need a concept or a format, recording and post-production, or just distribution of your content? Just hit them up and that it will be all taken care of. Fintech space in recent years has been booming and attracting creators with a hunger to reimagine the way money flows through the world, and our guest today, Arjun Singh, was witnessing this transformative period from the first row. He is joining us today to explain us what's really driving the hypergrowth in payments in the UAE and the region, what are the benefits of open banking to consumer and small corporate, what is embedded finance, and what are the untapped opportunities that we should keep an eye on. Buckle up and get ready for exciting 45 minutes of conversation with a financial guru and a really great guy, Arjun Singh. I am Vuk, and you're watching the Change Officer podcast. Enjoy. Welcome to the Change Officer, Arjun.
Well, thank you for having me here.
Thank you for finally coming.
Yes, I'm sorry. It's taken quite a long time. No, it's my first podcast, so I guess I'm like this swan who's going to try and portray a very composed picture above, but I guess my legs are going to be shaking quite hard.
You're doing great so far. Yeah, it looks perfect.
So hopefully the table's not going to start changing. But no, thank you for having me here.
No, it's really a pleasure, and I've been following your thought leadership series on LinkedIn for a while now, and I think you're sharing a lot of great insights about the industry, and I'm ready for 45 minutes of a steep learning curve.
Wow. Right, we're all learning constantly.
Exactly.
So I'm just
going through the change.
I'm just passing the message with a few words added.
You're doing a great job. So let's start with payments, if you don't mind. I did some research this morning as I was preparing, and I found some interesting facts and numbers. So despite this whole regional tech savvy trend and 80-90% of mobile penetration, the region has remained heavily dependent on cash yet. There is like a third of retail transactions are conducted electronically. Now, with all of these new government and regulatory initiatives and new local, global players that are coming in and payment providers, the numbers are going up. So what I found is that UAE, so the number of consumer digital payments transactions in the UAE grew at the annual rate of more than 9% between 2014 and 2019, compared to Europe's average of 4 to 5. And Saudi last year had the growth of 70% between February 2019 and 2020, which is like, these are big numbers. So what are the key drivers of this hyper growth that we can see?
Okay. So let me start with 2 or 3 things up front. Okay. So firstly, I think we're going through a period of flux. So I think there are lots and lots of interesting numbers, which sound fairly impressive. But I take all of this with caution. I think there will come a level of stabilization. And then post-stabilization, I think the true picture will emerge. One thing is very, very clear, that we are making a massive shift towards digital payments. Having said that, we're still largely a cash-dominant society for a number of reasons, right? One which I would sort of highlight is that a lot of the focus for years has been on enabling consumers of certain income demographics to move to credit cards and debit cards. So the first step towards digital payments. Because in all intents and purposes, a non-cash transaction can be deemed digital doesn't necessarily have to be on your mobile phone.
All right.
Right? The second element is that I think the acceptance side of the business, which is whether it's the merchants or it's the government services which were being provided, I think less focus has been, I guess, given in terms of bringing them up the curve with regards to accepting digital payments. And so therefore, even though the customer might have been enabled to make digital payments, cash was dominant in terms of how merchants wanted to receive their money, and so therefore that influenced consumer behavior. Thirdly, and I don't want to make a big deal about it, but I think globally this is becoming quite an interesting conversation, is that the cost of accepting digital payments in certain markets is prohibitively high, right? Because of high interchange rates. You've seen a very interesting move from Amazon, I think, if I'm not wrong, in Singapore, where they've now put a surcharge on consumers paying using Visa, right?
Wow.
Which was in the news a few weeks ago.
Is that even allowed?
Yeah. Now, I don't like that idea. I understand the sentiment behind it, because at the end of the day, all of this cost, unfortunately, passes down to the consumer one way or the other. So I think there are a number of reasons why digital payments has not grown maybe at the rate at it could, even though we had high mobile penetration, we had the availability of electronic forms of payments. Plus, if you look at the UAE, the GCC generally, there is actually a very large blue-collar population, right, who has tended to in the past receive money either in cash or even when they've got onto electronic forms of payments, would typically just go to an ATM machine, put their prepaid card, withdraw everything out in cash, because that gave them the satisfaction, the assurance, and the feel of, how do I say, it's my money, and
it's a nice feeling.
Cash makes me feel real. Now, having said that, there were a number of trends, right? Global trends and local trends, which have been in play for the last, I would say, 3 to 4 years, if not longer, right? The ones which get talked about mostly globally have been, consumer shift away from cash, driven by demographics. So I think, the world is getting younger in some certain parts of the world. People are getting more savvier. Access to banking, cards is becoming easier. So there's a genuine shift from consumers away from cash, easier to manage, easier to carry. Secondly, I think the regulator globally are playing catch up, and I think they are doing a better job than they might have done historically. So there is a lot of enabling regulation which is coming in, right? Whether it is around payments, whether it is around open banking, whether it is around stored value account wallets. And both the Saudi and the UAE regulator have taken quite a progressive step, and so has Bahrain and other markets. So there's the whole enabling regulation. The third thing, which I think is arguably the greatest catalyst, is the digitization of everything, right? So our customer lives are getting digitized, right? We're buying more on Amazon, right? We're able to pay for fuel using wallets, right? Even sometimes not getting out of our cars, okay? We're able to order food through our apps, name so many. So increasing parts of our lives are getting digitized, and therefore payments is getting digitized, because payments is now becoming more and more an integral part of the end-to-end consumer journey, rather than a step that you took at the end of the journey. And I think that's very important to understand, that payments is now becoming an increasing part. And you will see that majority of the organizations globally now are creating in-house payment expertise, right? Because they're actually understanding the importance of managing payments from a consumer perspective, from a cost perspective, from a choice perspective, from a technology perspective. Now, those are three sort of macro drivers, right? If I zoom down and I come into the world where we live, I think there were a number of other factors which I think were already catalyzing the shift in payments. So first, and if I may say so, is the copycat effect, right? So something is working in the West or the East, right? There are some smart boys and girls who decide to say, why shouldn't we try and relaunch something, take the idea, tailor it to the local market launch. That was already starting to happen. Secondly, global payment players started entering the market, right? So very, very good example is in the last sort of 12 to 18 months, you've seen payment acquiring players or payment accepting players like Ardian, which I think is an $80 billion business out of Holland, Stripe, which everybody knows about from the US, checkout.com, which has come out of the UK, and several others. That's come and catalyzed the market. It's also driven some local players to come into play. So there's more happening in payments. Third, I think the VC community, the angel community is getting more and more excited, right? This part of the world receives a very small percentage of the overall VC pie, right? But that pie is increasing. And what's very interesting is that now we have a local VC scene, but we actually have international VCs also,
which is important.
Participating. It's very important, right? Because you want to be part of the wider ecosystem. You want to connect into all the brighter ideas. You want to have the right kinds of partnerships. You want to be in the global game, right? And especially for markets where the consumption itself is small, UAE being an example, right? Your net addressable market is somewhere between 3 to 9 million, however you want to skin the cat. You might have to think about becoming net exporters of ideas and technology. Israel is a great example who've done very well in sort of exporting fintech, right? And then I think last but not least, I think we have, growing interest from banks and incumbents in the area of payments, largely driven by the fact that if you look at the valuations these payment companies have achieved over the last 5 years compared to their peers in the same financial sector, they're outperforming by something like 5x. So increasingly, banks are trying to carve out their payment capabilities as separate businesses to focus on that with a view to extract greater value in the short term, but arguably in the long term unlock tremendous shareholder value, right? You could argue that these payment companies might actually become bigger valuation plays than the core banks. The core banks are sitting at somewhere between 6 to 8x multiples. Payment companies are going absurdly to 30, 35, 40x, right? So you can actually see. So I think all of these things were in play. Right? They were in play. They were slowly making their differences, evolving. And then we had COVID, right? So we had COVID, which was exactly. So the way I used the analogy was that, there was obviously fire building up, and then you took a huge pot of oil.
That we have plenty of.
Right? And nobody had planned for COVID, and you just poured it over. And that just changed. If you see across all of these, it just catalyzed nearly every single trend that I've spoken about. Obviously, the number one was the consumer shift, right? Because consumers were, let's be honest, either encouraged or forced to change behavior, right? And I think a lot of that behavior will stick, right? Now, we're seeing some crazy growth in e-commerce. I think there will be some level of flatlining, okay? But segments like groceries, right? They've grown at exponential level. I think people have gotten comfortable being able to order groceries at home. I think a lot of that will stick, okay? A number of demographics who never thought about doing e-commerce, right? Maybe our moms and pops, right? They've become comfortable with doing it, right? And once they're comfortable with something, then they'll
never go back,
do it, right? Cash on delivery, which used to be a big issue in emerging markets where people would use electronic forms of commerce, but still make payments in cash, right? We did a study in my previous employer, and what we realized that yes, there was some percentage of the consumer who really did want to use cash, right? But a very, very large percentage of that cohort had the mindset, which was driven by trust, where they wanted to see the item that they had received just to make themselves comfortable before making payments. So when we switched cash on delivery to payment on delivery using electronic forms of payments, those customers just shifted, right? So I think payment will continue to grow, payment will continue to evolve, and the lines of payments between things like lending and others will actually get blurrier, right? And we'll talk about BNP a little bit later, where I personally think this is a classic example of lending and payments where the lines are blurred,
Wow.
right?
This was, we're going to extract this snippet as I told you. And this is like 4 minutes, very clear explanation of payments and where the payments industry is heading and what's its state. I loved it. You mentioned open banking. Let's talk about open banking and its benefits for consumers and small businesses.
Okay. So I'm a big fan of open banking. As a matter of fact, I'm a part of something called the MENA Fintech Association. We did a piece on open banking and what it really means for the Arab region in partnership with the Arab Monetary Fund and a number of other participants, both fintechs and large established companies. My employers, Arthur D. Little, MasterCard, a number of people. So I'm a big believer that open banking, if done properly in this part of the world, will be arguably the biggest catalyst for unlocking the growth in fintech, right? It will also, I think, catalyze tremendous partnerships between the incumbent banks and the fintechs. And I think it will come at a great gain for both the consumers and the customers, who could be small businesses or large businesses. I'm not going to get into open banking. I think anyone can Google open banking and there is a million reports that you can read. So
that's true.
I think that's where. What I would encourage everybody to think, at least in the industry, and I think we can see that shift already, and in a number of conversations I have with the regulator, is that people are looking beyond open banking, right? So open banking was largely a step from the world of closed banking. And funnily enough, in closed banking, we as consumers didn't even know that actually the data which the banks held were actually our data, because we were always made to believe that that's bank's data, right? It's actually our data. So open banking to closed banking was a very simple shift that consumers could actually permit their banks to share certain data points with third-party providers, which could be fintechs, who provided more targeted specific solutions so that the consumer would benefit, right? Obviously, the initial reaction globally was the banks were not that interested, because in effect they felt that they were losing control over the customer, and what if they lost the customer? I think the banks who are progressive have started to do 2 or 3 things. One is they've started collaborating with fintechs, right? Secondly, they are actually working with fintechs in a manner that the consumer gets a holistic solution, so they're part of the outcome. And actually the ones who can afford it are starting to invest in fintechs because they're realizing that the speed of innovation is greater for them to be able to catch up internally. So why not actually invest in certain fintechs, right? So you're seeing all of that globally, right? If I just take a step back from a consumer perspective, and I've got sort of 5 bullet points to say why open banking or open finance, which would also include insurance, investments, wealth management, and eventually open data, where you might be able to bring financial services data with non-financial services data. And I use the example of healthcare and health insurance, where health data and insurance data could come together, benefits the consumer. Simple terms. 1, we all want simplicity of life, right? And especially if we can start getting an aggregated view of all our financials, which typically are always very dispersed, right? Because we have more than one bank account, we might have a credit card with somebody else, we have loans with somebody else, we have insurance. So getting that whole aggregated view is might sound simple, but it's actually very, very powerful from a consumer perspective, right? Secondly, your choice as a consumer increases automatically, right? Which is massively beneficial. Okay. Third, you start getting access to innovative new solutions, right? Which typically you might not have got in the past. Okay. Or you would have got at a very slow speed, or you would have had to wait for your bank, or you would have had to switch a bank to get those. So those things will happen. The greatest benefit is, and hopefully this is where the power of data comes in, is we move away from generic banking and we start moving towards personalized banking. And what I mean by personalized banking is not having an IVR which answers in the language that you want it to, but actually understands where you are in your life, what your specific needs are, right? What is your credit history like? And so that products can be tailored for you. Now, it sounds all very utopian, but I think we're getting there slowly and steadily, right? And can all be done digitally, and it all can be done by you yourself. And I think that whole concept of self-service is critical. And then finally, and most arguably for maybe someone like me, might not be very important for others, is you start actually taking control over your own data and therefore your own destiny, right? So those are the advantages from a consumer perspective. I also think from an SME perspective, there are some great examples, right? Some of them are very similar from a consumer perspective. So, control over your data is one. Getting an aggregated view is essential, right? Because SMEs are time starved, right? And if you can actually make their life simpler, then that becomes better. It also leads to automation, especially from an SME perspective. A number of their financial services needs can be automated because you bring in third-party providers who can actually do that. And then, most importantly, I think it takes away a lot of the red tape, which the SMEs actually get stuck with, right? Especially when dealing with banks. You have to just hear the horror stories. Walk out, pick an SME. You yourself might be one, right? It's very hard. It's very hard to do banking being an SME. And again, I think if you have time later, we'll talk about how, or at least my view on how we can tackle SMEs in this market, especially if you're a bank. Because I think what we're doing currently is not enough, right? At least that's my humble opinion.
I'll tell you from my point of view, I'm an SME, absolutely.
Yeah. Well, and you are one of hundreds of people, and so let me
Thousands,
take a segue. So I worked with a startup 2 years ago because I do mentor and I do some angel investing. We never launched the product, or the SME never launched the product. But what that SME did was an incredible piece of work, because I think they went and interviewed well over 100 different SMEs across maybe 5 or 6 business categories. And they realized that a typical SME during a lifestyle over a 5-year period would need somewhere in the region of 100 to 115 different services, right? And that could include everything from getting you a cleaner to actually having access to, the cloud, to having funding. And in most sectors, they were actually struggling to find the right service provider. They did not have the time, because let's be honest, most SMEs are small. And I talk about MSBs rather than the M in the SMEs. I'm talking about the small businesses. And we personally felt that, there was a golden opportunity out there to address this from an ecosystem perspective, right? Which would benefit the bank or whoever the orchestrator of that digital ecosystem would be. But let me come back to that later when we talk about it.
All right. So as a great introduction to the next topic that you just explained, so you gave us the intro to the open banking. Yeah.
Well, I hope I did.
Yeah. I think it was great. We talked while we were preparing for this episode. You introduced me, and we talked about the topic of embedded finance.
Yeah.
Which is something that we started seeing all around us now globally, and we started to see it locally as well. Open banking is a prerequisite to embedded finance, right?
It definitely is a great enabler.
Yes. Yeah. Why is the embedded finance the next big thing? Let's explain it to the wider public, not only people coming from the industry, because for them it's easy to explain, and we have others who are listening as well.
So I'm going to be judged by a very dear friend or dear acquaintance, a gentleman by the name of Simon Torrance. He's a bit of a guru on the topic of embedded finance, and I'm a big fan of him. So I actually follow him quite closely. And we speak regularly enough. So in terms of embedded finance, so embedded finance could be embedding payments, could be embedding lending into a customer journey, right, which is being offered by a non-banking institution, right? And the outcome being that you bring the financial services offering into the holistic journey of the customer, so as to make that journey more enriching for the consumer, right? I'll give you a very simple example. When you go and buy a car, right, the journey is actually quite clunky, right? If you were to look at, so you go onto the internet, you look at the car you like, you possibly build it, you do a test drive. That's all fine. You go, you test drive the car, you like it, you come back to the showroom, you do some negotiation on the price. And then obviously, you want to take a car loan against it. And then at that stage, you're sort of passed on to, a bank or a range of bank or a broker who then starts to collect a whole host of information from you. That information then is sent to, several banks who then assess your credit based on either data which is available by the central bank, your salary slip, so on and so forth. That could take 30 seconds to a week.
I just want to sit in the car and drive.
Right. and then you might even get a rejection, or someone might say, by the way, we can only approve a loan so far. Then you have to go and figure out how you actually do the bridge of the, you bridge the gap. You find the gap, you bring the money, you eventually make all the paperwork, you sign a whole host of documents for the bank, you sign a whole host of documents for the insurance company, you sign a whole host of documents for the car, and then you leave. What embedded finance is trying to achieve is by saying, is there a way to seamlessly embed finance in this process so that when Vuk is buying this car, the journey looks more like buying a car and
it's
not
more about the
buying
car.
insurance? Because let's be honest, none of us wake up in the morning and go, yay, I'm going to make payments, or yay, I'm going to take a loan.
Nobody's really happy about it.
Right? Let's be honest. That's not kind of what we wake up for. That's what actually gives us anxiety. And that's why I tell all my peers that we people who belong to the banking, the financial services industry, we give anxiety to people. We don't give happiness. Okay. What gives the person happiness is that, he drives into a Toyota showroom and drives out with his Supra.
Yeah.
Right. That's kind of the satisfaction. Yeah. He walks into IKEA and he buys the new sofa for his living room. That's what gives him satisfaction, not the loan and the payment.
POS machine.
Exactly, not the POS machine. So, in simple terms, embedded finance is the ability for non-banking players, right, and retailers or other service providers to be able to embed finance products seamlessly into the end-to-end customer journey, so that the customer experience is actually brilliant, right? And the outcome is positive, right? And basically the feedback and the long-term feedback is good. Now, we're starting to see evidence of that happening, right? Now, if you go back to the good old days, there used to be something called store cards in the US, which are very, very famous. So if you went to Macy's or you went to Sears, you would get a store card, right? And you had got a pre-approved, and there was a loan, and you could go and buy, and at the end of the journey you paid by the store card, and it actually kind of worked, right? And that was, in my view, the simplistic manner of embedding finance, and it sort of worked, right? Obviously, over a period of time, credit cards came and store cards went out of fashion, co-brands took over, and so on and so forth. So it's not that embedded finance is such a new concept and has never existed. I think because now we have such digital technology and the ability to connect the various dots, right? We're making smarter, processes. So therefore, embedded finance is coming. I do think that the reason why it is a great catalyst is because it will grow segments where there is tremendous underpenetration, right? So, for example, insurance is underpenetrated in this part of the world. If you're able to embed insurance into buying a house, okay, or into renewing a car, right, or into taking clinical care, right? You will start seeing, or life insurance, right? You'll start seeing actually people who typically would have avoided these insurance, not because they didn't want it, but just because they just found the whole process clunky and the awareness levels were low, that those will grow. So embedded finance will address some of the awareness issues. It will make access a lot more easier and therefore take up. And I think that's where the big opportunity is. And what's the cherry on the cake for me from a financial services perspective is your cost of customer acquisition goes down because actually someone else is doing all the hard work for you. The car company is doing it, right? BNPL is a great example. And if I could just segue, unless you want to ask me a question, right?
No, please go ahead.
Right? BNPL for
Absolutely.
me, and people argue that, why is BNPL seeing the growth? BNPL is not it's a 200-year-old innovation. As a matter of fact, there was a very interesting article which I had the opportunity to read, and I reposted on LinkedIn with a few of my own comments, that every good idea doesn't have to be a new idea, right? BNPL has existed for 200 years.
In a different shape.
In different shape. I come from, I'm ethnically Indian. I could argue the entire retail Indian sector was built on this whole concept of buy now, pay later.
With
right?
like checks or what?
I'm sorry?
With checks or?
Well, no, just people giving loans for short period of time. I have memories as a child being able to go to my departmental store, which was in my enclave where I lived, pick whatever I wanted, and the lady or the person who was running the store would just note it on a piece
Arjun.
of Arjun came, and because they knew my parents, and at the end of the week or at the end of the month, you paid. So in the simple concept, we bought now, we paid later.
Enabled by digitization.
And now you obviously have digitization, you have smart scoring, you have integration in the whole end-to-end customer journey, and even furthermore. So, you see Klarna, which, started their life as a BNPL player, then went and invested in banks. I would argue one of the reasons is because that lowers their cost of capital, right? And are rapidly evolving into a marketplace. So people are actually going on to the Klarna marketplace to shop, not just to take BNPL. And I think they will continue to grow quite aggressively as a marketplace. And, you have local examples. There's a company called Tabby, who I have a lot of time for and a lot of respect for their founders, right? They're moving in that direction too. So BNPL was just the backbone. Again, embedded finance, it just enabled. But again, what a customer gets delight with, or in this case, a millennial, is, the dress a girl wants to buy for a Friday night before she goes out on a date, right? And she's able to split that over 4 installments rather than having to pay it at one go. She's not paying any interest rate on it. The merchant is subventing the BNPL player, right, in terms of the cost of the capital. But then the merchant is actually seeing, and there is enough evidence, and I follow this sector very closely over the last 2 years. They're both from a retailer, when I was at a retailer, and now in consulting, we're seeing metrics which are incredibly impressive. These BNPL players are bringing net new customers into stores, right? They're increasing the average ticket value of a product which is sold. And very interestingly, they're increasing the frequency, right? Now, there is the flip side to all of this. And so let me just be very clear. So BNPL is not all singing and dancing and great. There is a flip side. There is a concern about people unnecessarily getting into debt, right? People who can't afford, right? Especially people who have maxed out their credit cards and now are actually using BNPL to continue to build up their credit, indebtedness or debt indebtedness. But I do think those things can be corrected without a knee-jerk reaction, right? And we're starting to see things like self-regulation, which has come out in Australia, which I think is a great idea and should be considered in this part of the market. There was a decision made by Capital One in the US, which I applaud, which is you cannot use a credit card to repay a loan on BNPL.
I mean, what is the difference between, you said there is a flip side of BNPL, which is getting unnecessarily in more debt. What is the difference comparing to the credit card?
Well, there isn't. And actually, fact of the matter is, what people don't understand in this part of the world is that your average APR rates on credit cards are upwards of 35%. And I don't have published numbers, but unofficially, nearly 40 to 50% of people who hold credit cards are revolving at 40%. So actually, that's hugely punitive, right? You have interchange rates which are sitting at 1.5% to 2%. Let's be honest; those costs are being pushed to the customer too. So But the whole concept is that a credit card is only given to people who have proven their credit worthiness through the necessary checks. But BNPL is being given to people who are not necessarily going through the same credit check, right? This debate and argument can go on in circles, right? And again, we're not going to solve that between you and me. But my argument is that the most, an average ticket size of a BNPL transaction is 400 dirhams. And a credit card, your average credit line could be as much as 20,000 dirhams, right? So at any given time, if a person is taking a 400 dirham loan and is failing to repay, the BNPL company can just stop giving any more loan to the individual till he's made the 400. In the credit card scenario, there's a 20,000 line of credit. There's a minimum payment at the end of the month, which is, I think is 5 or 10%. And therefore you're revolving, which is great because it makes money. And I've got this very facetious saying, and my banker friends don't like it, is today's revolver, i.e. who revolves his credit, is tomorrow's defaulter. Right?
Exactly.
Right? Now, I'm not saying that 100% of the people who revolve today become defaulters, but you love these customers for 2 to 3 months while they're revolving.
Yeah.
And then you start worrying about the fact, oh God, are they ever going to be able to pay?
Yeah.
Right? So BNPL is here to stay. And it's here to stay for the right reasons. The merchants love it so far. Right? You can see globally, everybody is introducing it. Emerging markets, developed markets, right? Consumers in a specific segment who does not want to have credit cards is awesome. It's a great way for debit card customers to be able to get short-term credit because I'll tell you, the love for credit has not gone away. The love for credit cards might have gone away with a few people, right? And finally, I do think that these BNPL players will evolve into something very different than who they are today as they build their customer base. And Klarna is a great case in point. And Afterpay's acquisition with Square proves that too.
Yeah,
right?
And as all other emerging business models.
Exactly. So I think it's too early to kind of call it. I love a statement which I think came out of 11FS, which is you can like it or hate it, but you cannot ignore it.
Absolutely.
And that's the way I see BNPL. And I think it's a great example of embedded finance if I were to use one. Right.
So I had a lot more topics that I wanted to cover, but I had to ask you my last question in the business part, and then we'll switch to some other topics.
Sure.
So from you've been very, very involved in this industry for a while now. I can see that you have a thorough understanding of it, obviously, and you're very good with articulating it and explaining it.
Thank you.
Where do you see, or what do you see are the biggest untapped opportunities when you think about everything that we mentioned so far? So we have emerging payments, we have open banking, embedded finance, we have some of the companies that are embracing it, taking the lead, we have fintechs and startups who are growing now. What are some of the untapped opportunities that you would bet on in the next 5 years?
Okay, so I'll mention two, and then because of interest of time, I'll go and delve into two. I think a lot of the focus, a lot of the excitement, a lot of the money has been in B2C fintech, right, or consumer fintech. I think there hasn't been as much focus on B2B fintech, right? And this is not just a regional issue or a regional phenomena. I think it's a global phenomena. But that phenomena is correcting itself very rapidly. And one of the reasons it's actually correcting itself very rapidly is that if you really look at, even if you look at B2B payments as a sub-segment of financial services, numbers range, but B2B payments is 5x of B2C payments globally. Okay? And most of it is in prehistoric times, right? So therefore, the opportunity to actually disrupt, innovate, and add value is tremendous. And you will see, if you go out and look at all the VC data which has come out in the recent months, actually even going back as 12 months, you're seeing a fundamental shift in terms of where, VCs are showing interest in terms of where they want to invest their dollars. And you're seeing, B2B fintech. So I think one area which is very, very interesting, and we're going to see a lot of growth in whether it's B2B ecosystems, B2B fintech, B2B payments. That's an area which is completely untapped. And I think we should watch that space very closely. There'll be some interesting plays out there. All right. And that's all on art. My personal bugbear, and it has always been there, is that I don't think the financial services sector, right, does enough for the SMEs, right? And I'll take a step back, right? So typically, you can take UAE for example, and although these numbers might not be entirely accurate, I don't think they're completely off. Anywhere between 40 to 50% of the GDP of this country, and I mean the non-oil GDP, will come through SMEs, right? They will also employ somewhere between 70 to maybe as high as 85% of the workforce, right? So they're actually the engine of any economy, right? And it should be no different. But if you speak to any of the SMEs, the way they are dealt with by banks varies, right? Most banks are fairly reserved or conservative in the way they deal with these SMEs, or if I go down, MSPs. Now, there's good reason, right? There's good reason. One is data from these MSPs is very hard to get, right? They tend to be businesses which are small and they operate partially as businesses and partially as individuals, right? Historically, they are more susceptible to any shift in the economic scene. So, they ride the wave much more rapidly. So there's good reason, right? But I think now with technology, with the ability of banks being able to partner with other players, and I think some very, very interesting global playbooks emerging out of emerging markets, China, Latin America, India, I do think a lot more can be done, right? And what I mean a lot more can be done, I'm a big believer that if you really want to solve the SMB problem, MSP problem, I think you take an ecosystem approach, right? You don't go purely as a financial services provider, but you look at partnering with other service providers in an integrated manner and addressing the overall SME problem together. That will not only allow the SME access to services well beyond financial services which they need, and at the end of the day, they'll need financial services to pay for it. It will allow you to collect greater data, which will then allow you to invest or fund them more easily, right? You will build a more engaged interaction because, in effect, you're going through an ecosystem approach. I personally think the small and the mid-sized banks have a great opportunity, right? Because I think they're at risk right now, right? As greater digitization happens, right, you will possibly see that people will gravitate to a fewer players. Look at China, right? Nearly 60-70% of all transactions come out of WeChat and Alipay. Over 1 billion people, right? Why wouldn't that happen here? So if you're going to start seeing concentration of banking services going to a handful of players, then I think the smaller and the medium banks have this great opportunity to go down with an ecosystem approach. And I'll throw an idea out there, right? Imagine a utility coming together with a technology player and a bank and orchestrating a digital ecosystem which can be taken to the market, right? So we have super apps which address the consumer market. I don't want to call it a super app, but think about a super app approach to SMEs, right? Where you could have financial services offering, you could have digital and IT and technology, you could have professional services, you could have logistics, supply chain, and real estate, right? A bank and a technology player could take a lead, right? And then orchestrate all of this through partnerships, exactly the way a super app is built, right? But in super app for SMEs. And I'm fairly confident that someone or the other will do it. Now, telcos are in a great position to take the lead on it in partnerships with the bank. A utility could be, because, I always talk about utilities. Without naming a utility, there is one utility, let's say in Dubai, who has every SME as their customer, right? I'm not going to tell you the name, you can guess it. Imagine if they were to build an ecosystem play which took them well beyond what their core offering is, right? And bring other people on board. So I think we need to think disruptively if we really want to solve this problem. Because continuing to do what we did yesterday is not going to change just because we have a little bit more, digital and more data. It'll improve the situation, but I don't think we're going to get the seismic lift. So, as you said, where I do see great opportunity, I do think someone will break away and do something incredibly disruptive. There is enough evidence in different parts of the market world that you can learn and apply, right? And again, that will be of huge benefit to this region, where I think there is a large number of SMEs and they could do with help.
Interesting. Very interesting. Right. We're going to keep an eye on it.
Keep an eye on it.
All of you out there, keep an eye on it.